those that are joining us here for today's webinar. Glad to have you. Glad you're joining in as a user group. We have Telka Clem with Bean Counting 101, the fun side of inventory costing in BC. So I was already mentioning to you, Telka, I'm excited about it to learn, and I'm sure everybody joining us today is too. So appreciate you stepping up and doing this.
Absolutely.
Great. If you want to go next. And so, yeah, we are, always looking for volunteers and ideas. Anybody out in the user community, this is your user group. We'll talk about the board here in the next slide, but we're here to support you as a group and all of us individually. So if you want to give a future webinar, reach out to me. I'll have a link in a few minutes here, but or any of us on the board to be a presenter, or if you have a burning topic, feel free to chat it today or follow up with me separately in the future. Would love to hear from you. All right, next one. So this is this year's board members. I'm not going to stay here too long, but you can find us also listed out on the Dynamics community sites. The next slide drills this into David Laster and I are on the webinar programming side of that. Hence I'm here to facilitate today's webinar. So you see my LinkedIn QR code. Feel free to snapshot that, but I'll just say this: there aren't a ton of Blaine Pennypackers out on LinkedIn anyway. So feel free, if you miss it, go and search for my name out there and you'll find me. All right, next one here. So upcoming, of course, we got today, but then in August, we have Christopher Royeris with Copilot AI and You. I'm definitely going to be in on that one. I was mentioning a minute ago, I'm going to be at Summit at the Academy for an AI class as well. So I'm trying to absorb as much as that as possible, and you'll hear from him in a month. In the 1st of July, we have Robert with real world planning worksheet scenarios. And then October, we won't have any particular scheduled webinars unless something just happens to come our way. But for right now, we're just focused on holding the summit. And we hope all of you that are listening and engaging here today are going to be jumping in on that. So, and I do want to note, as a bullet says there, these webinars are recorded and they are available to you afterwards. It takes a day or two to actually get it posted, but they will be available in the future as well. If you want to go back and catch some of the good stuff Telka's going to cover with us today, if you don't catch it all, you have the opportunity to go back to it later on. And we'll see about trying to get the deck posted as well. We were talking about that briefly too. There's not a great way on learners yet, but we're working through some of that. So that may be available too in the future. All right, next slide then. So a couple other things coming up. We have our national user group meetings. These are always great to attend. Gives you an update on what for some things that we as a board are working on, as well as provide some additional learning opportunities with the topics you see there. So those are always included in our national user group meetings, typically 1.5 to 2 hours in length. And the next one is tomorrow. So feel free to go on Learners and go on the calendar and sign up for that. And you'll get the link for that, just like you did for today's webinar. And then you see the next couple dates coming up. Road shows, you see those listed. If you have the ability to go to any of those, if you haven't been to them, great opportunity to network and do some learning as well. Kind of mini summits, if you will, but anyway, encourage those. So yeah, Telka, if you go to the last and not least, the
right.
Yeah, excited about this. I will be there. Telka's going to be there. Lots of other folks, and it's a great one to get to know each other better, to meet and greet, see each other face to face if you already do know each other, and learn a ton. Lots and lots of really good content. All that's posted out there. The agenda's out, so you can sign up. If you're already signed up and you didn't, you can go out and look and form your own personal agenda and all that good stuff. So looking forward to, excited to go. All right.
Me too.
So I'll turn it over, Telka, to you. Thank you very much, and I'm looking forward to it.
All right. Well, thank you, Blaine. And it's always a real honor to be able to speak to our Dynamics community. And I do enjoy the session that we have in Dallas. We often, I live in Texarkana, and I run over to Dallas, and it's normally in January, February. We pray for good weather because that's always like our snowy time. But anyway, we are going to do the Bean Counting 101, the fun side of inventory costing today. My name is Telka Clem. As Blaine shared, I am the pre-sales engineer at Western Computers. So, we all just kind of come together and as a huge community. Just a little bit about me. I have been working with Business Central, Navision since version 2.6. I'm not the most seniored around, but certainly been around for a while. While I've been working with the software for 26 years, I've also enjoyed two daughters that have blessed me with six grandchildren. And I and my hubby are doggy and kitty moms and dads. So that's just a little bit about me. But let's talk about what we're going to see in our agenda. And we've got our inventory setups. We're going to talk about a relationship between posted entries, the posting groups. We're going to address the age old questions. So that'll be kind of a secret at the end. And then I'll address your questions from the chat if we've had any while we're talking. But let's jump into our inventory setups here. And if we go way back, and I mean way back, I told you I've been around since version 26. In the beginning, well, it wasn't so much the moon and the sun, but there's two processes that have been around for a very long time. And they seem to give us a little bit of trouble, at least in our older versions. BC has made this much easier, but they're called adjust cost item entries and post inventory cost to GL. Now, these two processes back when we were on later versions of NAV and early versions of Business Central had to mostly run at night because they would give us some trouble in the warehouse when we tried to ship. Because what the adjust cost item entries is doing is it's actually adjusting the cost for any significant changes that might happen to like purchase receipts or manufacturing output, and it's adjusting that to our COGS. So when we would ship, it would calculate those adjusted costs and it would slow shipping down. So in order to keep things moving in the warehouse as we're loading packages, we would always just put these processes on a job queue. Now we don't have to do that anymore because of all of the wonderful improvements that have been handled inside of BC. You can continue to run these processes throughout the day and not have to run them on a job queue. The one thing I want to note here is they do have to run in this order. Often people are still running them manually, and sometimes we get them backwards. We don't want to get them backwards. We want to make sure adjust cost item entries always runs first, and then those cost changes to the ledger entries post to the inventory cost inside of the GL. Now let's talk about what the inventory setup looks like. And I'm going to share with you my preferred settings inside of Business Central now that we have a really great traffic and situation inside of Business Central with the way costing always works. I like to turn the automatic cost posting on to yes. go ahead and have the automatic cost adjustment turned on to always. What this does is it does calculate adjust cost with every post, whether I'm shipping, whether I'm receiving, whether I'm producing any type of invoicing, whether I'm outputting and finishing manufacturing production orders. So adjust cost is always running. What does this mean to you? This does mean that as these postings are happening, your subledgers are staying in balance with your general ledger. You won't run any type of inventory valuation report and it be out of balance between your inventory value and your general ledger. So that's a real nice thing to make sure that they are always in balance. The only caveat to this we have found is if you are shipping an enormous amount of shipments throughout a day, we say somewhere around 10,000 packages a week might end up being a consideration for continuing to run these processes at night on a job queue. But those counts are pretty large for most people that are using Business Central. So you should be good to be able to run it in an always situation. The last one that I want to kind of point out that I do like having turned on is what is called expected cost. Y'all, this is essentially your received, not invoiced, your shipped, not invoiced, and any other interim cost that might be happening inside of Business Central. Certainly, we're always going to have an RNI, a received, not invoiced. We're always going to have goods that we've received and we're waiting on that vendor uh, invoice. This way, I get the value posted to my general ledger. Now, I will tell you that whether you turn this on or not, the value entries are calculating your expected cost. They will be in your item subledger, but it's the posting it forward to the general ledger that this checkbox does for us. So I like being able to see it in my general ledger as well as the item subledger. Now the ship not invoiced, ooh, this one's kind of one we don't want ever to have a balance in, right? If we've shipped product to a customer, we want to invoice it. So this is kind of a warning to you if your account that handles shipped not invoiced has a value in it. So that one's kind of a good key to watch. And then other interim cost adjustments could potentially be freight that is an item charge, or some manufacturing charges, or anything along those lines. Another area on the inventory setup that we always want to make sure that we really understand are these two fields having to do with average costing. Now, if you are working with average cost, you will need to consider on whether you want that average cost calculated at the item card level or the item and location and variant level. If you are doing the item and location and variant, you're going to want to make sure you're using stock keeping units because that's where that cost is reflected. Okay, so that's where that cost is. And then as far as the average cost period is concerned, this is the period of time that that average value is going to be calculated. You can set it to day, week, month, or accounting period. And then if you go this length of time with a zero inventory on hand, the average will start over. So if I have it set to a month and I go at least a month or better without my average cost being set, then you will note that your average then will start over. Also, average cost in BC is extremely tricky. I would have to say, of all the costing methods, this is probably my least favorite. What makes it really tricky is the fact that the people that are handling returns have to choose the costing layer or the average layer that is being returned. If they don't do this, it will cause your average to get skewed, and then we have a problem with our average. So that's just one of the really caveats as far as average costing. It's not a problem if someone knows really what they're doing and why they're doing it, uh, but it can cause some problems. Our friends that are coming off of QuickBooks, they often are doing average costing, but they don't have to stay with average costing with Business Central. We'll talk about that a little bit later down the road. Also, I like the location mandatory turned on. This helps me kind of not get in a situation where I have item ledger entries or value entries that are not assigned to a location. This is really an issue if I am doing any average costing that has a location invariant associated with it, or any costing method that I may be tracking stock keeping units on. You absolutely need that location code, okay? So I like to make sure that we've always got that turned on. Unless you're just not doing any locations at all, you certainly can leave it blank, but there's very few times that we wouldn't want a location code. One of the other things to call out is there's a couple of new fields here inside of Business Central. There's this cost adjustment logging so that you can have a running log or archive of the cost adjustments that have been made. And then this disable cost adjustment signals logging. So if you have the adjustment logging turned on, you may not want to see the messaging that is going on about that. So you can disable that as well. And then there's an earliest allowed valuation date. Now, this only pertains to when you are doing revaluations of inventory inside of BC manually. This does not pertain to the standard adjust cost that happens within the system. But you can call out a date that you want to make sure any revaluation doesn't post an earlier date compared to what you've put in this field. So that's some controls that Microsoft has given us around adjust cost and revaluation that are new inside of Business Central. If you want to kind of do some discovery around those new fields, I would always recommend that you do it in a sandbox first and not, try it out in production right off the bat. So let's talk about the relationship between the posted entries inside of Business Central. I don't know about y'all, but the item ledger entries along with value entries to me confused me for a very long time until I figured out with lots of folks' input teaching me. The light bulb finally went on, and I realized this concept. So for item ledger entries, we are going to get an item ledger entry inside of Business Central for every change of quantity that happens. Item ledger entries they reflect the value, but they have nothing to do with the value inside of Business Central. They are 100% about the change of quantity. I've received inventory. I've shipped inventory. I've transferred inventory. I've positive and negative adjusted inventory. I've output inventory, or I've consumed inventory either through an assembly or a production order. So you will get a single item ledger entry for every change of quantity. Now, if you are lot tracking or serializing, you will also get an item ledger entry for every change in lot number and every change in serial number. If I receive something, maybe I receive 10 of a product, but they're all serialized, I will get 10 item ledger entries. Okay. But up underneath that item ledger entries, you're going to have flow fields showing you the costing that are associated with the value entries. You will have one or more value entry up underneath the item ledger entries, and it represents a value entry represents a posting to the general ledger. Okay, there is always a link between the value entry and the general ledger, no matter if you're doing the adjust cost always, or you're doing it on some sort of cadence like twice a day or during the night. So hopefully that helps you kind of understand the correlation between item ledger entries and value entries. I know once I kind of created this picture for myself, it was like, I had a light bulb moment. Now, one of the things I like to do when I'm working with item ledger entries and also value entries is I like to add some fields on the page, because right out of the box, Business Central doesn't have these fields turned on. The entry number is turned on, but it's way over here to the right. Okay. So I like to turn it on and move it further up where I can see the order in which my item ledger entries created themselves. I also like to turn on the sales amount expected and the cost amount expected. This is that expected cost that calculates inside of the item subledger whether we're posting it to the general ledger or not. This will be that RNI, that ship not invoiced, so forth and so on. And then for my value entries, I like to turn on the adjust and move it way up here next to my entry type. And again, I like to turn on the sales amount expected and the cost amount expected. If you don't turn these on, then you don't have the visibility to actually what is happening along this line. Now, this is just an example of that one-to-many population. Here I have a line. It's item ledger number, entry number 676. It was for a purchase receipt, and my purchase receipt added 10 quantity to my inventory of this item number. But up underneath it, you'll see an actual cost of $1,000. Well, really, what happened, if I'm looking at my value entries, is I received a purchase receipt and I had a expected cost of $1,000. But then when I posted the invoice for this receipt, I reversed that expected cost and I had actual cost then of $1,000, which is exactly what you see in the flow field on the item ledger entry page. So when using standard costing on all of your cost, whether expected or actuals, are at the standard. So for my bicycle here, if I had expected cost, it would be $350 and 5.95 in cents or decimal points for the actual cost and the expected cost. I would then get variances against that if there were any differences. So your inventory, whether it's expected or actuals, will always be valued at your standard. However, expected cost does adjust based on the unit cost on the item card. It's that average of the quantities we've got on hand, so that your unit cost will be your expected cost when we've got received not invoiced inventory value, shipped not invoiced inventory value, and produced not finished whipped value. Okay, it will always be at our unit cost. Let's talk about posting groups and how they affect our costing here. So I'm looking at an item card, and on the item card itself, under our cost and posting, you're going to find our general product posting group and our inventory posting group. Those are then used in our two different posting setups that affect our inventory. First off, you have to look at your general posting setup, okay? The first column of the general posting setup is a general business posting group, and that comes from your customer or your vendor card. And it depends on if you are using that field or not, and then the value you have on that customer or vendor. The next one is that general product posting group that is coming from the item card. So in conjunction or combination of the two, you're going to then drive, for the most part, your income statement accounts. What are my sales accounts? What are my credit memo accounts? What are my purchasing accounts? What are my adjustment accounts? Things along those lines. So you are going to, it does take the combination of the two. If you are not using a general business posting group on your customer or vendor card, then it would just look at a blank general business posting group along with the general product posting group you have on your item card. A blank general product posting group on your item card is not a valid field. We can't do that. The other posting setup that uses the item card to direct information is the inventory posting setup. Now, your first field on the inventory posting setup is your location code. This is another reason for making location mandatory, because I then drive my inventory account and my inventory account interim with this posting setup. I can have blanks. It's not that you can't in the location code, but you will note that I can have different inventory posting accounts if I want to for different locations. The second field is that inventory posting group code from the item card. So as we're looking at the inventory posting group, I can also drive two different inventory accounts and inventory account interims based on whether it's a finished good, a raw material, maybe you have resale items, maybe you have sub-assembly items. You can drive those to different inventory accounts just by using different inventory posting groups inside of your item cards. So you will note that I'm using all the same account number here. A lot of people do that. And one of the things that you will find inside of your value entries now that used to not be there is both the inventory posting group. The inventory posting group and the general product posting group are carried on the value entry so that you can compare if you want to, what is raw materials or what are finished goods and so forth and so on. You'll also notice that you've got a WIP account out here. So as we're handling WIP in production, this is the account number that it's going to follow. And then if you are using standard costing, you will have your material variance accounts in the inventory posting setup. So whether it's your material variance from production, your capacity, your overhead, your capacity overhead, or your manufacturing overhead, you can drive those accounts based on location and inventory posting group. Just note that they are always going to follow the finished good. Okay, so they follow the account numbers that you have set up there. All right. So this brings us to the aged old question when we're looking at our inventory. What costing method do I use? It's been the question forever, and I have actually been a consultant for a little over 20 years. Kind of worked through the ranks, started as a consultant, became a solution architect. Now I work with the pre-sales teams to do the demos. But I can say for the first 7 to 8 years that I was a consultant, I mostly worked with standard cost because I worked most heavily with manufacturers. And for years, the ERP systems that manufacturers had, it only did standard costing. So that's the costing method that a lot of manufacturers used. But as we started kind of coming out of those standard costing needs, and the supply chain issues started becoming more difficult, we started seeing people, move more to FIFO. Now, I will tell you, if you're doing manufacturing, you want to choose a costing method and stick with it. If you want to use standard, that's fine. If you want to use FIFO, you can do that as well. But please don't combine them. It will create you a hornet's nest, okay, from a costing perspective. Once COVID happened, uh, Blaine and I were talking about, the changes that we had come, to us in COVID before the session here started. But once COVID came, supply chain became a real unknown, and people were, really struggling with the cost of what it was taking to manufacture something. So FIFO gives you that visibility of tracking the costing layers. Your actual cost is, first in, first out, so that you have that ability to track those costing layers. Business Central also does LIFO, the last in, first out. It actually brings, the last costing layer that came in, that's the one that's coming out, so that if you've paid something very different in 3 or 4 costing layers deep, you're leaving that cost behind and using the latest cost. This one's not as popular as the other ones. I have to admit, not a lot of people do last in, first out, but it certainly is available to you. Now, I will tell you, along with these, with Business Central's lot tracking, you can also do a first expired, first out. so that we are picking up our inventory that is going to expire first for manufacturing or distribution, so that we're tracking that by lot number. Specific. Specific costing actually doesn't have to be set on the item card if you don't want to, because if you're using any of the costing methods other than standard, if you have lot tracking turned on or you have serialization turned on, your lot tracking, I'm sorry, your costing becomes specific just by using lot numbers and serial numbers. What I mean by that is if I pay a certain amount for a certain lot and I use that lot, that is the cost I will use in my cost of goods sold or consumption into my production. It is specific to the lot I'm consuming. Same with serialization. If I bring in 2 or 3 items that are serialized, I will actually use the costing layer specific to the serial number I ship or consume. So, specific does not have to be set on the item card. You certainly can, but it inherits that specific costing based on lot or serial tracking. Average, we've talked about average a little bit, but here again, you want to make sure that users fully understand how they will affect average costing. If they do a revaluation of inventory, it's critical that we get it dated properly and that we use the applies to entry properly on the revaluation line, as well as returns and things along those lines. So, average absolutely works. It gives us an average value, but we have to be very knowledgeable users. And that extends down to your people that are actually using it, doing revaluations and doing returns. You want to make sure that they understand the control and the why they're affecting the costing the way they are. So it's super important to do that. And then, certainly, last but not least, is standard. Standard does establish a standard cost for that inventory. You will see the adjustments to that standard in your expected and actual cost inside of the value entries. And then those value entries and adjustments will post to the variance accounts on your general ledger. The thing about standard, I was talking to you about how FIFO, is becoming more popular with manufacturers. And it's all a result of the change of the supply chain, you know, pendulum, I guess. It's become more like a roller coaster than something that just kind of glides up or down as, prices adjust. And especially through COVID, I started hearing that, we're having to roll our standards every month. If I just said a statement that you've said to yourself or your colleagues, I will submit to you that you are no longer doing standard costing. You're really doing FIFO costing because you're adjusting to that monthly value. Okay. So if you're getting ready to do maybe an upgrade, or you're looking at BC at possibly starting to use inventory inside of Business Central, or if you're just so sick of the way your costing works, um, reach out to your partner and kind of get their assistance and conversation on these costing methods and really what they would recommend for your environment. They know your business, and they will certainly be able to help with you. I will tell you that if you are currently using BC and you have inventory and you have costing and all of that, it is not a painless change. Okay, it takes some work, and certainly something you want to test in a sandbox before you do it, and so forth and so on. But it is not impossible to change costing methods. This is just an adjustment. Again, an item card showing you a costing method of FIFO here. And back to that cost adjust, there is a button on the item card that will tell you if this value is true to the moment. If you ever question if your adjust cost is really running, you can go look at your item cards and look at this little button here. It should be turned on if your cost, your value entries and your item cost and your unit cost have been adjusted. So you will find that turned on. It's a nice thing to have. Let's look at a couple examples of the result of the item ledger entries and the value entries for two of the costing methods, one being FIFO and one being standard here. As we saw before, this top is the item ledger entry. This is a purchase receipt. The item ledger entry was created as a result of receiving a quantity of 3,000 into my system or into Business Central. Now, here is my purchase receipt down here at the bottom. That 3,000 of quantity was valued at one time at $6,600. When I then received a freight charge for that inventory that I had received, and that freight charge gave me an actual cost of $1,000. I used an item charge and assigned it to the receipt that I had gotten against my PO inside of Business Central. So the freight charge as an item charged increased the value of my inventory. Because it is a posted invoice, it posted actual cost. So if I had looked at my item ledger entry prior to my invoice, I would have seen an expected cost of $6,600 and an actual cost of $1,000. May look a little odd to you, but that's spot on. That is how it works. I then received my vendor invoice, and my vendor invoice was posted, and my vendor invoice came in at $6,700. So I reversed my expected cost, and I then posted my actual cost. Each one of these, the 6,600 as expected, the reversal of the 6,600 as expected, the addition of the invoice at $6,700, and the addition of $1,000 all created a ledger entry inside of Business Central, okay, in the general ledger. So just note that each one of these dollar amounts have a corresponding general ledger entry inside of your ledger. Now, I will say that I cheated a little bit. You will note this is a little bit out of order, but I set my dates to reflect what I wanted to say. Every once in a while, we kind of have to make up our dollar amounts and correct some things. Now, for standard cost, we're going to look at something very similar. I've got a purchase receipt of a quantity of 12. When I received that inventory, it was valued at $3,547.20. Okay. I then received my purchase invoice associated with this for duties, and I had a freight charge, and both of those posted uh, to an actual cost at the time of those item charges being posted. However, they also created a variance. Why? Because I'm using standard costing, and my inventory must always be valued at my standard. So my duties and my freight were posted to my general ledger to a variance account for that purchase. Same with my invoice from my vendor. My invoice actually came through at 3,550 and 80 cents. However, because my inventory must always be valued at my standard, I again got a variance associated with that invoice for $3.60. So this just gives you an idea of what's happening beneath your item ledger entry. But again, using standard cost, truly the difference is this, creating the variance accounts so that I have visibility in my P&L to that. If I were using my FIFO costing, I can still see the difference that happened between, or that variance between either my purchase or my production with the value entries as they happen, because I get a negative of my expected cost and I get a positive of my actual cost on the same line. So you could actually run some reports against this and see what your variances are without hitting your P&L. So if the goal is just to know what the variances are, FIFO costing works really nicely with any and everything inside of Business Central, and you have the true value of your cost or your inventory in your inventory accounts. I'm not trying to convince you either way. I just want you to understand and know how the difference and how they work so you can best make a decision for your business. Now, I've got a couple of favorite things that I want to share with you that really do uh, affect the way adjust cost and the posting of the inventory cost to the GL. It affects both of those and how they work. Okay. So, first off is your general ledger setup dates. Inside of your general ledger setup dates, you've got allow posting from and to. And in our new version of Business Central, we now can have a formula. How many of you have gone like, I hate having to manage those dates every month? You don't have to anymore. You can manage them with a date formula. This is so cool. I have wished for this for years. But the strong thing I want you to take away from is that the dates on the general ledger setup drive how far back Business Central is going to let adjust cost post to my general ledger. What I mean by that, let's say I got a purchase receipt this month. It's July, but I don't get the invoice until August, and it is different. Okay. If I don't set my general ledger setup dates to only allow me to post in August, as a result of the general ledger setup being open in July, those adjustments will adjust my COGS in July. We don't want that. Okay. We want to adjust our COGS inside of the current month we have open. It is extremely important when adjust cost and the post cost to GL are running that we manage our dates properly. If you're not managing this, please, please, please manage this for your adjust cost. Also, you've got user dates. You've got the ability to set dates on your user setup. You also can do date formulas here as well. Now, your user setup should be an exception to your rule. Your general ledger setup is your umbrella. Maybe finance wants to be able to post backwards for a few things. Note that adjust cost and the post inventory cost to GL do not look at the user setup. They do not allow you to post backwards. So if you were thinking that the adjust cost would let you go back into a prior period, it will not. It's not going to follow your user dates. It follows the dates on the general ledger setup. The only caveat to that is if you are controlling your inventory periods. I would also recommend, if you heavily use inventory, please use your inventory periods. What that does is at month end close, your finance people, after everything is balanced, we've gotten everything trued up, our financials are solid, go close the inventory period. By doing that, you will not get adjust cost transactions backwards into prior periods. It does shut the value down of that period for the inventory. So these are three favorite things that you're going to want to really pay attention to when it comes to your inventory costing and how it will affect your financial statements. So Blaine, that's what I've got for today. I hope that our audience has gotten at least one little something out of what we've talked about today. So
that's fantastic. Thank you so much again, Telka. And yeah, I definitely have some notes myself on my end, things I want to look into and follow up with. So I know I did. So
yeah.
and I was monitoring chat. I did not get any questions through the way. So they must have you must have covered it all.
Well, one thing that I want to mention to our audience here is, if you want to even dive deeper, Dynamics Communities at Summit is allowing me to do an academy session that's on Sunday. It'll be 8 hours long and we're going to cover everything. But I'm not the only one speaking. There is a huge group of VIPs and people that have been in the Dynamics community a long, long time, like I have, and some of them even longer. And they will be also teaching different courses, manufacturing, AI, how to set up your financials. So if you're interested in any of that, or if you need any continuing ed points, you can use those for that as well. So I would encourage you to go out to the summit and look at the academy classes that are available.
Yeah, absolutely. And thank you for that, Telka. That's for sure. Yeah, I definitely super encourage people to go out there and look at those academies and the whole summit. So there is one question that popped up here in the chat. I don't know if you can see it.
Uh-huh. Yeah. Can you take a minute to re-explain the earliest allowed valuation date on the inventory setup? So let's go way back. And I believe this earliest allowed valuation date is what we're talking about. Certainly, Shelley, thanks for the question. So inventory can be revalued in a couple of ways. Certainly adjust cost changes that value, and that's an automated process that Microsoft runs in the background. the only way you can control the date is when we do something like a revaluation journal. So that automatic adjust cost does not take, it does not pay any attention to this validation date. It is paying attention to your general ledger setup and your inventory periods. Okay. So I can't say that enough. That general ledger setup date is critical to adjust cost. Okay. That's what it's paying attention to. This early allowed valuation date is only paying attention to limiting when you do a revaluation journal, when you're revaluing your inventory. I hope that's maybe a little more clear for you, Shelley.
Wow, now we're getting even more popping up here. So,
Oh, okay.
so yeah, did you want to take a look in the chat? And, or,
Sure.
yeah.
Side note, fellow cost analyzers, if you do reveal the reval journal, yeah, thank you. Uh, so, and how can I test that valuation of total inventory is correct? I have over 2K SKUs and suspect there's some posting errors in the inventory. Ah, so there's two inventory valuation reports, and one of them gives you a full spread of what's in the inventory subledger and what's in the general ledger. I believe it's called the inventory cost to general ledger analysis or something. Blaine, you may know better what it's called. I can't remember the report name, but if you do that inventory cost to general ledger, you'll find it, but it's going to give you a full spread of what the value is in your subledger versus the general ledger. And you can run it by location, you know, filter it by certain items if you suspect, you know, it's just a certain amount of, but it's a great report, and it runs way faster than it used to.
Yeah, that's great.
All right.
That seems to be it. So once again, thank you, Telka. Really appreciate it, and thank you to all the users that came on and for the questions at the end. Appreciate it.
Yeah. Thank
Participation.
y'all. Appreciate it. Have a good day.
Goodbye now.
Bye. Thank you.